Hello future millionaires and welcome back to my channel. I am Kayla.K.Keane, and in today's video my guest and I will be talking about life insurance and how having life insurance can help you to become a homeowner faster. So my guest is Leighton Morgan, who is a senior member of Sagicor. He's actually the agency manager at the Knoxford branch in Kingston. So today he'll be walking you through how you can own property by owning life insurance. Thank you so much for coming, Leighton.
Indeed, a great pleasure.
You know, it's always my pleasure to talk to you about anything life insurance because, of course, you've been doing this for over 20 odd years.
20 odd years, 73 to
Was my manager at one point, so I know that you are an excellent human being and an excellent insurance rep.
Thank you very much.
So I'm honored to have you.
Indeed.
So we're going to talk about life insurance today, but I'm aware that some people don't understand that there are actually different types of life insurance. Right. So the first thing I want you to tell me about is the first two categories of life insurance. So when we talk about life insurance, what are the major life insurance that we have?
So you have term insurance and you have permanent life insurance, or we call it whole life insurance.
Right.
Yes. Term insurance, you buy term for a period of time that you might have, you want to do something and you say, okay, I need insurance, or the financial institution request, and you might decide through your insurance rep, you will get term insurance. And there's more term insurance. There's term for life, and there is term for a period, for 15-year term, 30-year term, and term for life.
Interesting.
Yes.
So if you think about it, for those of you who already own real estate, you'll notice that when you go to the bank to get a mortgage, they'll actually ask you to start a life insurance policy.
Yeah. Well, some will, and I say some will. It is supposed to be, but there is, of course, there's mortgage creditor insurance, and of course,
which is another option.
Which is another option, and so therefore the financial institution that you go to, or financial institution of choice, might decide that, okay, without even introducing life insurance, might just introduce it to creditor life insurance.
Okay. All right. So let's talk about the option now where they ask you to start a new life insurance policy.
Right.
Explain that process to me. What is that all about?
Okay, so for the mortgage advisor will inform you that if you don't have your personal life insurance, then it would be the best thing to do, right?
Okay.
And from a life insurance perspective, it is indeed the best thing to do.
Okay.
Right? Because having your personal life insurance assigned to your mortgage will give you a lot more benefits as opposed to just having the mortgage creditor insurance.
Okay, so what are some of those benefits?
Benefits, all right, good. All right, so when the mortgage is being taken out, right? And you have your personal life insurance. One, a lot of people don't know it can be assigned, right, over the lifetime of the mortgage, right? So it can be assigned.
So you have a 30-year mortgage and it's assigned for that entire period.
And so what it is doing, it is building cash values. So it builds cash values, all right? But what you need to do from jump is to understand the importance of designing a plan for your need. Okay? So it's designing the plan for your need that is going to ensure that the plan that you buy is for that need. So designing the plan is important.
Interesting. Okay, so it's not a one-size-fits-all.
No,
that's
it's
what
not a
you're
one
saying.
size. Definitely not.
You need to look at what you need and personalize it.
Definitely.
Perfect. And of course, you can talk to Sagicor if you need assistance with that part of it.
Right.
All right.
So you want to talk to your insurance professional.
Correct.
Yeah.
All right. So can you explain the process now of borrowing against your life insurance policy?
Right. All right. So again, designing the plan, all right? But a lot of people would have bought a life insurance plan that builds cash values over time.
Right.
So you have the interest fund and you have the investment fund, all right? So the investment fund is where you decide that you have an option of putting towards to building cash values over time.
Okay.
All right, and this now will, if and when you are borrowing, or if and when you are going to get a loan from, all depends on if the insurance or the financial institution uses it. Okay, because I can tell you, not all. All right, but in most cases, for the credit unions, they will use it. Banks will do so same too, but they normally use about 80% of the cash buildup.
Oh, okay.
And so there's cash value. So there's cash value and there's cash surrender value.
What's the difference?
Values, okay, so cash value is where you have cash on your policy, cash build up over time, and then you are able to access that cash value at your will,
convenience.
At your convenience.
Right.
Okay. Cash surrender value is where the life insurance policy would have built cash over time, but it is built from the interest fund.
Right.
All right. And if you decide that, let's say, for example, you had a loan or the mortgage, and the mortgage would have finished the mortgage life, ended, then you decide that, okay, the reason for the need for the insurance is
the
no
mortgage,
more.
so it's no
So,
more.
so you say, okay, the cash build up on the policy now, you might decide to surrender the policy for the cash build up.
I get you. So that could be some well-needed cash.
Well-needed cash.
And I'm thinking that if you think about retirement planning here in Jamaica, I don't think we have a great retirement plan.
As far as the financial literacy part of it is concerned.
Correct.
Right.
So I think that that's also an option.
Right.
To assist you
Excellent
to ease
option.
your way into retirement.
Excellent option.
Because if you think about it, mortgage should end around about retirement,
Right.
and then you go off into retirement. Even if you have a retirement fund,
Plan, yes.
sometimes the cash is not available immediately. Sometimes you have to wait 2 years, and people don't realize that.
That is so true.
Right, so that's a great time to surrender the policy, and you have some cash flow, some
Very
liquidity.
much, very much.
Awesome. So what I want to know now, so I'm sure that there are risks with everything. So what risks should investors be aware of when they are using their life insurance for real estate acquisition?
Okay, all right. You want to, again, I mentioned designing a plan.
Right.
Right? And so you have life insurance is used for, is multifaceted, multiple needs, family protection plan, final expense, etc. So when you design a plan for mortgage, right, you want to know that it's designed for specifically for that reason or that need. Okay? Because if you assign your life insurance plan to the financial institution, is now owned by the institution.
Oh.
So when it's owned by the institution have the first movers on the policy. Okay? So they're going to take whatever is owed to them before it goes to the beneficiaries, which will be your beneficiaries.
Interesting. So you need to take control of your policy by making sure that at the get-go you agreed to the correct terms, which is where an insurance advisor would come in to guide you, because I'm sure the bank...
Or you can buy a separate plan. You buy a separate plan, so you know that one, your mortgage need is taken care of, and your family protection is taken care of.
So you're killing two birds with one stone, as Jamaicans would say.
So as I said initially, that your life insurance plan is multifaceted.
Okay, so as an insurer now, how do you make an assessment as to whether or not someone is a good candidate for this option?
Very good. Well, it is from a responsible point of view, right? Now, you have people that come will buy insurance as a family protection, not knowing, and because normally insurance agents are going to call you from time to time to say, Miss Keane, are you interested in insurance? All right? So you might be introduced to just a mere insurance plan or a family protection plan. All right? But as far as mortgage is concerned, it is designed in a different way, one, and two, just want to make sure that the plan that you have is such that it is going to be for a long term. Okay? And as I've always said to my clients, it is not money that buys insurance, it's good health.
That is actually very, very true.
Very true.
And when you add age to that, it's even more advantageous.
Very, very well said.
Because if you think about the older you get, you're more likely and more susceptible to comorbidities versus
Yes,
when you are younger
when you're
and
younger.
frisky and
Correct.
thing. So for the young people who are watching, you should
Yes.
be paying even more attention, because this can be the opportunity that you have been looking for. Because I know a lot of young people complain about how difficult it is to acquire real estate here in Jamaica.
Yes.
But this is another option that people rarely speak about, this option.
Very much.
So you can definitely utilize it and use your good health and your age to your advantage.
And the good thing about it is that financial literacy, I mean, I had to go to find financial literacy 23 years ago, and I'm still learning, because it's
I
not
agree
taught in
with
school,
you.
right? And so from time to time, whenever we talk to young people between the ages of 25 and 35, right, which of course that is the time they start thinking, you know, boy, I should be, right? You should really start looking to buy your mortgage protection plan from early.
I agree with you. And interestingly, I actually came to work with you to become more financially literate.
Yes.
That was a large part of the process. So now, something that you would have to invest money and time into learning, we're actually teaching people in 15 minutes. So you should really pay attention and try to use the steps that are most applicable to you to make life better for yourself in the
Most
future.
definitely.
All right, so I want you to tell me an example now of maybe a client or somebody who used this and it worked out for them.
But Kayla, I must tell you that, you know, I've been around for quite some time, and I have clients. I have clients. And I have clients.
You have lots of testimonials about it.
That has used their life insurance plan, and I am on internet to tell people that I am one example of using my life insurance plan.
Tell me about that
Because
it's the first I hearing this story for all these years I've known you. Tell me about what you did exactly.
Because I acquired my first mortgage by using my life insurance plan.
Really?
Right. So it was assigned. It was assigned to Sagicor, and of course it has grown over time.
Right, that is awesome. So that can also be a part of your retirement planning.
Right.
That is excellent. So as it relates to know what Sagicor has to offer to clients, can you tell me what can Sagicor offer to clients that they don't know about as it relates to if they want to take this route?
Well, getting or knowing a professional financial advisor is key, right? Because as I said before, when you enter the industry, you start by learning. Okay?
True.
And I've always said, you learn, you take off the L, and then you earn.
All right? Excellent.
However, starting, you need to get to know your financial advisor. And that is the resource that Sagicor offers by having very good financial advisors and we have a mortgage department outfitted to ensure that you are guided in the right way.
Okay, so persons can definitely reach out to Sagicor or call, and I'll leave your information in the description box as well as any advisor's information, because I know you're a manager.
Yes,
you might not want to deal with everything.
Yes.
So you'll give me a line that they can reach out to, and then persons can learn more. But as we come to the end, because we don't want to overwhelm you, what I want you to do for me, Leighton, is to tell the viewers, if they don't remember everything, because you see, because we don't grow up in a society where financial literacy is taught, some of these concepts are hard to grasp for some people.
Right.
So in 1 minute, what is the key takeaway that they need to remember about using your life insurance to acquire real estate?
The key takeaway would be that life insurance is multifaceted. And in order to ensure that you have the right plan, then you need to speak to your resource advisor or your financial advisor that will give and design a plan just for you.
Okay, that is excellent. So as you know already, Leighton, it was my absolute pleasure for having you for this video. You shared a wealth of knowledge, and I certainly appreciate it. So thanks for coming. Now for our viewers, I want you to go ahead and ask any question that you have for Leighton in the comment section. I'll get the answers and place them there for you. And I want you to remember to like the video, leave a comment, and subscribe so that you can become financially literate. As you know, over here, our main goal is to take you from renting to home ownership. So until next time, we're signing out, but don't go far because there are other videos that you can watch right here on the screen. Bye-bye.